have poured in. Let's pull up Shriram Finance and see how it's doing. It was up 3% last we checked, up about 2% as we see it right now. There's a bit of profit taking that's happened after the initial surge. Gaurav is with us. Gaurav, that PPOP number looked really good. Tell us more.
Well, as when we look at Shriram Finance, the numbers actually look good, and let me tell you why. When we look at net interest income, that increased almost by 10% on a year-on-year basis. PPOP, that increased almost by 11.5% on a year-on-year basis. Now, what actually came in as a surprise to investors is that when we look at credit cost, specifically if you look at the provisions, that increased just by 3.5% on a sequential basis, and as a result, when we look at credit cost, that remained flattish at around 1.92%. That is the reason why when we go ahead to profit, that increased almost by 11.5% once again. Now, when we look at the net interest margins also, we saw some bit of an expansion that increased almost by 8 basis points. Street was expecting around 10 basis point of expansion. So, more or less in line with the Street's expectation. And lastly, the AUM growth. Now, that has also remained at around 15.7% in line with the Street's expectation. So, all in all, when we look at the numbers, they are good. Specifically, credit cost, that came in as a surprise, because when we talk about gross stage 3 and net stage 3 assets, although we are seeing some uptick in gross stage 3, but the area of concern, which is PV and CE, which was highlighted by few other companies, now we do not see any concern in Shriram Finance for these areas specifically, because CV and PV both shown some kind of improvement in gross stage 3 assets, and we are seeing some kind of pressure from the construction equipments and MSME segment. So definitely good set of numbers from Shriram Finance. As a result, we are already seeing some uptick in the stock price as well.
Got that. And PSU banks on